So now we finally get to the point to set up the fund, right?
Yes.
So now, because of Ray and Pistis, so we are already well prepared to do it. So you know, since 1995, I started trading mutual fund, right? At the time, you only can trade once in a time, a day. You only can buy and sell before 4 o'clock. So I was trading in the individual account for hundreds of accounts with home. Every day we are very busy for 2 hours. You know, say we just buy tomorrow, we buy this until leave tomorrow. And every day we trade once in a day. We have 1996, since 1996, we have, you know, minimum 30% return, minimum, sometimes more. But at that time, there is no margin, you know, because every account is in a bank, is a mutual fund. You cannot trade, you only can buy once in a day, you know, and then there's no margin. Now this stage, because, you know, ETF is so popular for everybody, right? For institutions, for traders, right? So like ETF, especially like QQQ, SPY, these two ETF, they have hundreds of millions a day trading. You know, the price of SPY is 450, and then the QQQ is 350. You know, it's big. So now they make constructs of
Thank, can't hear you.
to make one time. You can hear me?
Now I can hear
it's
you.
okay.
Yeah, you're back. Yeah.
No, it's
going
okay.
away.
Oh,
Yeah.
why? Because my cell phone will be good because I use 2 of my other account, so it will be clear. I suppose. And then now I just to tell you the basic. Now you can use RSP or 401 account and buy, you know, ETF with short, right? You can short the market. Just like a buy stock. You like SQQQ is the opposite inverse of TQQQ 3 times. So when you trade the future account or ETF, the most risk is the leverage. You know, when you go to leverage too high, like over 3 times, is dangerous or risk. So as a trader, if you trading with after leverage or only 3 times the leverage, so it's relatively safe, you know. The other thing is this, because now ETF, you have 2, you can buy or trade both directions. Not like before, right? You only can go long, you cannot short. So you only make money when the market is going up. So now you can make money when market is volatile. Now the market is very volatile. This is the best time for trader. One day is going up, the second day is going down.
Right.
Yeah. So you can, you know, the way, like now, on Tuesday, right? Tuesday market, because the Russia troops say withdraw, the market the semiconductor sector, the 3S, 3X, the SOXL go up 16% a day. That's a huge, right? The next day, if you short it, you're going down 10% a day. So if you get a both direction, you go to 25%, with minimum. Huh?
26% if you get it right both directions.
Yeah, he's right. So most of the traders, they only know how to go one direction. Most of the traders, they only go one direction. So if you trading now, you trade before you buy mutual fund, you only go one direction. And you trade an ETF before is only one direction.
Yes.
Now ETF go to both direction. So everybody trading ETF without to know the financial statement or the news, anything, huh? Everybody watch the big market. Say today, market going up, and everybody buy, right? So the next day, market going down, everybody is selling. So only thing people care is liquidity, price, huh? So this is the best time to do business like this. Once set up a fund, and we with this like technology, like a Zoom webinar like this, you can leverage to the whole society, right? With minimal risk ourselves. Everybody have, if you say, because one thing is if you leverage with your money. The second thing you leverage with the society, the whole market, use other people's money with minimum risk, right?
Yeah.
You say if you want $1 million, you can broadcast it to 10 or 100 or billions of dollars. So everybody has the same low risk. Now is the time of trading everything. But the most popular thing, the most liquid thing is the ETF, Because if you trade SP future or currencies, people you only can put limited money in there. Otherwise, you will lose the all, right? So there's a one way, just like straight buy or sell ETF without leverage. So leverage to the society with other people's money. If you have $1 million, you don't need anybody have less than $1 million. So there's lots of people who have more than $1 million. They don't know where to go. To us, huh? We are the only place, and flexible. We know the market. We know where to buy, when to buy. We can hold. So relatively safe with the ETF. So once you demonstrated, say, we have one account, now was $1 million. You say, if you don't have $1 million, you don't come with us, right? Minimum.
Yes.
Then everybody knows you have tens of people listen, viewer, hundreds of even 100,000 viewer. So we got the clients we wanted, right?
Right.
It was pretty easy. Now I just talked to Ray, say, because now the Zoom meeting, there is another one called a Zoom webinar. Webinar when we trade, and every day we say we buy And what do we buy? We can show them what we buy, how we buy it, and what do we buy. And the end of the day, what is the result? And everybody watching, you know, because everybody want to make money. So this is a big market, you know, and this is the best time to do it because all the ETF is so hot, you know. Maybe even get it harder, you know, the time.
But you have you have like a preferred ETF that you really, that's your go-to ETF that you like to trade?
You know, usually ETF, the most popular one, and we go with the most popular one is QQQ. You know, if you, and SPY. So if we have a margin, if we have cash account, we use 3 times ETF, like TQQQ, 3 times QQQ, and SPY. But most of them, there is another one, semiconductor sector, is SOXL and SOXS. There is another one today, this stage, the last 2 months, I found another pair is it's moved extremely, you know, very extreme. That one is a S&P 500 biotechnology sector. They are like one that first time I saw it is $42. Now today is $18 in less than 2 months. So the other side is 20 from the shorting side, from $23 now the 50 go to 55. So this is very, very good and very attractive if we see
so
this.
23 to 55 in how long?
2 months.
In 2 months.
Yeah. You know, now
wow.
the market will move one direction. Huh?
Yes, yes.
Yeah.
Wow.
So it's very easy when you just go one direction, you know. You know, like oil too, but the oil ETF is not so active or liquid, but it's okay. But you know, like, you know, SPY, 100 million shares a day. That's huge, right?
Right.
QQQ also hundreds, you know, like 100,000 shares a day. The TQQ is about $50 million, 50 million shares, around 50 million shares. The biotechnology side is about 5 million shares, 5 million shares a day. It's very active. You know,
my other question that I really wanted to ask you is like, what protects us if we are on the opposite side of the market, right? Let's say if we're betting long.
No. We at short term, we want to go the wrong direction. We only get it wrong in a day, the limited. You know, we are not the guy who buy and hold it. If you buy and hold it, you have like like if you have from 55 to 25, that's risk for people who are long, a long term. They don't know how to trade. For me, I only go, the maximum is 1 day, but usually we change right away. Like when I see something go against me, we sell it and go the other direction.
Go the other. Okay, so you would just reverse position.
Yeah.
But then, how about if there's some sort of major news that
Yeah.
really moves fast, too fast for you to act on, right? Because that can
No,
happen to spikes.
the only thing is spikes is, say, is something overnight, you know. So people really are scared of overnight, you know. But that's the possibility of that is like 1 out of, you know, not even 1%, right? It's 1 out of maybe once in a few years, you know. Last time there was one time spike, right? You know what happened is the vaccine, you know, the pandemic vaccine come out, the Dow Jones Industrial go up 17,000 points. No, 1,700 points in a day. And the Russell 2000, they are up 10%. Index, equity index up 10%. That's only happened once in a lifetime, you know. But now, if you really, you know, like, if something, if you're really, you know, want to protect it yourself, the only way you can do it is well protected is without leverage, you know, because the way the winning the game is the leverage, the volatility, you know, the range of volatility. If you say every time I only expose to the market in Canada and the US, the biggest move is 3% a day, right?
Mhm.
But maybe 10%, that's 10 years, once in a 10 years, you know, right? It's rare. That's like last time is 911. You know, they move 1%, not 10%. The whole market moved 10%.
Right.
Yeah, but this is like a small chance, you know, low possibility. So there's a way, you know, we don't want to be too much risk. So we don't want the investors have too much risk. So what do? We do cash account. So that's relatively safe. And then there's a beat 99% of people. 99, right? Because 90% of people they don't trade, and 90% of people who only trade in one direction, right? And those people who are in the market, they're leveraged, you know, because most of the people who are in the market, they don't have much money, right? So all
Right.
you know, more guys who always want to use small money to make big money. I've had huge return, right? So when you trade an ETF without leverage, it's very, very strong, very, you know, relative, because they say now everybody knows 90% of fund manager or trader cannot beat the index, right?
Right.
Yes.
Yeah. So now for me, without leverage, beat the index is pretty easy, you know. I beat it in 1990 since 1996.
Really, huh? You've
Yeah.
been beating the index, huh?
Yeah, beat the index a few times, not just beat it. You know that if the index go up 10%, I at least make it 20%, you know, or 30% with short-term trading. It's liquid and safe, you know, much safer than just, you know, buy and hold.
Mhm.
Yeah, the key is no leverage, you know. The position we put in ourselves in a very, very strong, you know, position. And, you know, in the market, the position is very important, right? you have to where you sit, you have to be, 99% of better than the rest of the market. So if you trade in ETF, you without the leverage, that's for sure is, most people can win. But now most people, they don't have the money, they have to leverage, But the second thing is we use the whole society, like, other people's money, right? The one way we say from Wall Street, we go to Main Street. From Main Street, we come back to Wall Street. So this is the way we do business, right?
Right.
Yeah, with the confidence and the safety we have. So if it's too volatile or too risky, nobody will come, right? So we want to make sure it's not risk, because when you talk about, if you talk about no risk, people don't believe it. But in a week, in a day,
that's why I truly believe that the risk management aspect
it's very
has to be key. It has to be key, has to be very good, has to be very, very solid.
Yeah.
Right?
Yeah.
Because the best offense is playing the best offense is defense.
Exactly.
Right?
Yeah.
So.
But the best defense is offense when you go to the opposite. Right? Huh?
I like that.
I'll tell you one thing. The risk is not a problem. You see, one thing this, transparency, everybody can watch, because not only you watch, Ray watch, home watch, and the whole world is watching. That's very risk control measurement, right?
What do you say that? What do you say that? I don't fully agree, because the world can watch, but at the end of the day, you can still lose money in front of the whole world, right?
No.
So
yeah, if we lose money, then there's no point to broadcast, right? But the thing is this: when you watch and Ray watch, everybody watching, I have to produce the results, right? We have to reduce the results a day or in a week, and if we, that the thing is this: the first time I do this, 1996, right? Everybody have their own account. Everybody have their own account. So everybody is watching, There's every day, I make $100, I'm making $1,000 every day. Everybody is happy, right? Huh? Yes. If you don't watch, I could lose everything. I tell you, Peters, I'm sorry, I lost everything. Yeah.
yes.
Huh? Then the
yes.
Huh?
But again, the market, the market is not fully under one person's control, right?
Yeah, no,
like
we don't control the market. We only follow the market.
Right.
We only follow the market, and just follow the market flow, right? The cash flow to where the money goes. We don't need to control in the market anything. We don't control. We don't influence in the market. We just see the opportunity. We take action. All right. So I will show you my judgment, my the experience and the results, right? That's the key. One show you, because you watching, Ray watching home, and everybody watching tape, especially investors are watching, right? So that's very safe. The second thing, I want to make sure we are safe, because if we don't have leverage, you say if you open an account, you don't need it to watch cash account, because there's no leverage you can do, right? The maximum leverage you can go is, I have to make sure you make, if you're not making money every day, you have to make money every week. Maybe I can lose one day, I make 4 days up. In the end of the week, I have to produce the positive results for a week, for every week. If I lose a week, you will see, you're bad. Nobody lose, like short-term trading, they don't lose all week. You didn't lose all the trade. Most of the traders would be right. Like what I'm saying, we have 70% of chance of right? 70%, that's huge.
Yeah, that's a
Usually
good percentage. That's a good percentage.
yeah, if you have good percentage, you have a good volatility, like risk account, like you only risk 1%. So you lose 1%, you have 99%, right?
Right.
So you can lose 5 times in a row, you only lose 5%.
Right.
But if you make 5%, you take another 5 days, right? But if you lose 5% at a time, you lose 5 times at 25%, it's gone.
Right.
And you lose 10 times, half 50% is gone. And then you 50% gone, you have to go make 100% to make it up, right?
Right.
So that's
But now,
yeah.
when you're losing 1%,
yeah.
What happens when you win? Do you also win 1%, or do you try to win at a higher ratio?
Yeah,
like
the key is this. You have the good question. If you lose 1%, your average lose should be much less than average your gain.
Yes.
That's the key. And the one thing is the point of losing. The second thing is the winning streak, right? Winning stream, stream. So you have to make more times make money than you lose money. So most of the people who once they lose money, they lose the big,
Right.
Most of the traders, they say they make 10. One of the friends who make a trading, right? He tell me, say, I made last 10 days, I make money every day. And then the second time, he lose it all in one day.
Lost everything. Yeah. Yeah.
So that's anytime you have leverage, that's what happened to anybody. But if you have no leverage, that won't happen, right?
Mhm.
Yeah, if you trade, the first time I was, we are so safe because we trade in mutual fund. There's no way we can leverage. That's the best time, and we got a lot of investors. We don't, all investors come to us. We don't know them. They only say, now open the account for me. Nobody asks questions.
Right.
Yeah. So the only thing is this: no leverage, and then you win. Anytime if you have used leverage, you can make a lot of money, but you can lose everything, right?
Correct.
But now at the time like us, I'm pretty old, right? I don't want to take risk.
No, that's good. We're in it for the long. We're in it for the long journey. So
we have to make money every our goal is make money every day, right? But if not every day, we have to make money every like five, like 4 or 3 out of 5 in a week, you know. But anytime, as you say, the lose money should be less than average making money.
Right.
Yeah, it's a number game, you know.
Exactly. It's really a numbers game, and that's how we have to look at it now. Moving forward, we already had this discussion, I think, in the group chat.
Yeah.
I'm going to set myself up with interactive brokers.
Yeah, that's what I mean.
In the meantime, Tang, what I'll also do, I'll open like just a demo account. While I set everything up, I'll open the demo. I'll send you the links. You kind of just play around with it. I want to see how the activities go, how it would look like when we go live, right?
Yeah.
And we go from there, and we will have more conversations in regards to really the risk management, starting at least, right? Starting at a pace that first thing first protects the investments.
Yeah.
And then from that point on, once we get more comfortable with the methodology and the practice, we can, push a little further, be a little more lenient, but still following a strict risk management system.
Yeah.
So that's really how I see it. I'm already on board. I'm on it. It's something that we've been discussing since last year.
Yes.
So let's give it a try and see how it goes.
Yeah. But the most important thing is, you have to. The demo account is actually is different. It's totally different than real account. Because it's not real money. Nobody cares.
Right.
Yeah.
Yes.
But because one thing is, once the money is real, people have to take it seriously, and you have to see what's the true level, because demo is different than, totally different than the real account.
Right.
You have to understand it. Yeah, because you cannot say pretend that this is real money. It's not real money, not right.
No, I understand that. Even the psychology behind the demo compared to real account. I've traded real accounts. I've traded demo. I know exactly what you're saying.
Yeah.
This is more just for us to also observe, because, like I told you, this thing we should kickstart this thing by mid-March.
Yeah.
So during that time, from now mid-February to mid-March, we can play around a little bit while you explain some of your methodology. I can actually see. You understand? I can see instead of just words, but I can see.
Once you see it, it's much better than talk.
Yes, than just the talking. Exactly. Exactly. We're not judging anything by the demo account. It's not the demo account that's going to make me make a decision. That it's not like that. It's not what I'm saying.
Yeah, no. But the real thing is real money, real performance makes sense.
Exactly. Exactly. Yeah. No, guys, thank you so much. Ray,
thank you. How much you are planning to start with, Petit?
Pardon?
How much?
We've agreed on 250K to start.
Yeah.
Okay, that's good. That's a pretty good number to start it. Yeah, just want to say a little bit. I mean, right now the market is a lot more advanced than when we just start the trading in 1995.
Mm-hmm.
Eh? Oh, okay. I didn't see you. I don't know you are there or not. Yeah, right now the market has more option more trading tour, and as well as Mr. Tan has more experienced. Yeah, so
Right.
yeah, it's good time to do this now. You just need clearly tell Mr. Tan your expectation, your goal, and yeah, we just talk about the leverage. That's the key for manager, the performance. No leverage, as long as you are trading profitable, the number of time is more than the lose, then you will make money. No
Yes.
greedy, yeah. That should be very safe. Yeah.
Great.
We're gonna give it a try. Well, I'm a risk taker. I've taken a lot of risk. I've invested in many different things. I've won many, I've lost many. So I'm
Really?
not, yes, I'm not someone who's too emotionally attached to money, right?
Yeah.
I want to see, for us, we have a long-term vision.
That's
This is
right.
just to kickstart what we've been discussing, myself, Ray and Tang.
Yeah.
For now, I think now it's going on to a year that we've been talking about many things, how we see each other growing into something much bigger
Yeah.
than where we are today. So it's a risk, but all I'm saying is that risk needs to be smart risk, calculated risk. And we need to all be on the same page as far as protecting the capital. Protecting the capital, because this is what can kickstart what we've been talking about for a year now.
Yeah.
Yeah. 2 years ago, I heard Mr. Tan told me, he said that you will, join with the trading.
Yeah.
You're very interested. Yeah.
Yeah. 2
Yes.
years. Yes.
Yeah.
Okay.
As
2 years, huh?
2 years already. Yes.
2
me
years,
just
add
yeah,
three.
before
Yeah.
pandemic. Yeah.
Wow.
You millionaire, you know, already.
Yes.
Yeah.
Let me
Yes.
add one thing here. Yeah, I haven't spoken. I was listening to you guys carefully. Let me just add from my perspective what I see here.
Yes.
Let us be very open about this. And PCs, correct me if I'm wrong.
Right.
PCs, from my understanding, is throwing his money into this right away, 250. He can throw more. But
Right.
more importantly, throw him, a lot of people can come.
Yes.
Right.
That's
What
he's
he's
a leader.
basically want to do is to be in a position where he can answer the question of everybody who will come.
Yes.
Exactly.
One of those questions will be, and they ask that all the time, especially investors I work with, before going to him, did you have a test account? He already made his mind on the 250, but the test account is part of the procedure that people may ask him before actually starting it. Did you try it on a test account?
Yeah.
So that's why, from my understanding, he wants us to start that as soon as tomorrow.
Yeah.
Sure.
When that is asked from him, he will be able to say yes and say, here, yes, I did, and here it is. But he said that we will kickstart on March 15.
Yeah.
My understanding
Mid-March, right? Mid-March, so it can be the 15th, it can be the 14th,
Maybe
the
13.
around mid-March.
Yeah.
You need to move money around, you need to do a few things, right? So I'm gonna take the time to organize on my side.
Okay. So
as long as the way it helps Pettis to talk to other people,
yes,
Mr. Tan will do that. We are on the same mood and same goal. Yeah.
Yes.
We are in the same team. Yeah.
Yes.
Yeah.
And the second thing he wants to be able to have because of North America is he wants to be able to answer the question from his investors.
Right.
Yes, Mr. Tang is talented, but do you have a risk management in place?
Strategy, yes.
A strategy
That's
Right.
what everybody,
and you have a management in
yes.
place. Because the way Westerner works, and Mr. Tang, you know that, and how you know that, they work by check mark, right?
Yeah.
You have this, yes. You have this. You have a compliance officer, yes. You have this in place. So he's trying his best, from my understanding,
I agree.
to be able to say to those people, yes, we do.
Yeah,
And to
I
be honest
agree.
with you, he hasn't told me, but I know. I've been discussing with business for some time now. The risk
Right.
management, the place where he wanted to say, I have it, but not only I have it, I have one of the best, and here's his resume. And then people see Columbia, they see Berkeley, and they go crazy about it, correct? So those are the things that he want to put in place, is those communication tools. Because if he can answer all that, plus the account, the test account, plus above all, the most important thing, town result on the trading on the daily basis,
That's it.
then the sky is the limit. Because everybody will want the money in. But the day they come, he should not say, okay, he's not going to say, we're going to put a risk management in place. He's not going to say, even if risk management is not necessary, he got to be able to check that case and explain to them what are the rules of the risk management. And the main
Right.
thing the investor want to know is capital protected.
Yeah.
It
That's
doesn't
it.
mean anything. Actually, it means zero. It means nothing. You cannot be trading and asking if capital is protected. But the perception of the investor is that if you have a risk management and you can say capital is protected, then they will come more, correct?
Right.
So what, even with a 1% risk, is not protected 100%. But you have at least to show that we are not gamblers.
Yeah.
The Western world like to think at the trader not as a gambler. And the way for them to think their trader is not a gambler is when it shows the risk management. I mean, I just want to stress why he's asking that, from what I understand in our discussion. This
Yes.
is
No,
correct.
you're completely wrong. You're completely right on that. I mean, we've had many discussions, right? So
Yeah.
what you're saying is completing a lot of the things that I might have maybe not gone into details with, but that's exactly where I am. And these are all things that myself, Ray, even Tang, even in the group have discussed it, right?
Yeah.
So now we're just vocally expressing those things. So there's nothing new here. It's just things have to be done properly, structurally, because my goal with this is not just, I don't just see 250K as, okay, well, no, I'm trying to, I know so many people behind me, so many people with money around me, but they like to see, when you talk to people, they want to see that you have skin in the game, that you did it right, why you approached it, how did it work, what are the results, why this opportunity. So if I'm able to answer all those and show them that, no, this is a step-by-step, well put together, well planned, with proper risk management, you're secured here, although it's known to be a risky investment, but somehow, somewhere we've mitigated the risk by a strong risk management. I started off like this I started off, the guy showed me results on the demo to kind of put me at ease, right? But now you guys can see the results on the live account because I took the risk at first. So these are all things that makes people very comfortable in following suit where money is being made, right? And we can get to 1 million very fast, very, very fast. It's not even something to.
I agree with what you said. Yeah, especially at the beginning, you do it properly, then you will do it bigger and much faster. Yeah.
Yes.
The fundamental is very important.
Yes.
So the
Exactly.
way you're saying is
And
correct.
this is something you don't know.
Yeah.
Everybody always says, Mr. Tang, Mr. Tang, Mr. Tang, right? Pieces. Hong is a magic trader. Actually,
Mm.
Mr. Tang came to trading because of Hong. She herself used to trade
Yeah. She traded a lot before.
a lot.
She was a broker.
Really?
Yeah.
Yes.
I didn't know
She was
that.
a registered broker.
Are you serious?
I'm the
I'm
cooker.
telling you.
You want me to
Yes.
show you the certificate?
Hong,
telling you.
are they playing with me or are they serious?
No, it's serious, man. It's serious.
Are they joking with me?
No, it's true, 100%.
Really?
I know them very well. I told you I live with them in Toronto.
Oh yeah, you did mention that.
Yes, I live with them.
No, she
daily.
knows how to trade. She's a
I was
broker.
a stockbroker since 1997.
Yeah.
What?
Yeah.
No.
No.
So you
She's
you
not
know
just
the
a
language
Why?
of
There,
Here.
that's because she's
No.
Mr. Tang wife.
That's amazing.
She knows the
That is
business.
amazing.
Yes.
She's not just a broker. She's the top broker in the company.
Are you serious?
Number one. Really?
I didn't know that.
She brought on almost 55% of the business.
Wow.
No.
Wow.
You know
That's
what
at the
she
peak.
did?
That's at the peak.
I tell you one thing. 2000, the year 2000, right?
Right.
She produced the most commission in the company in the broker's form. So
Wow.
the owner sold the company when the commission was high to a young guy, right?
Yes.
And without a home, and the company going under.
Yeah.
That's amazing. We learn something every day. Learn something new every day.
Yeah.
Hong is always surprising me. Huh?
Oh, really?
That's amazing. That's amazing.
Wish I could do that.
Let's do it again. Let's do it again. Let's reposition ourselves so that we can shine all together brighter this time. Yeah.
Yeah, this time we are well prepared.
Perfect. Perfect.
You're coming in the right time.
I'm very happy to hear that. I'm happy to hear that because I believe in that. There's always whatever the timing is, it's always the right timing for me.
Yeah, we call it the perfect timing, you know.
Yeah.
Yeah, perfect. Exactly. Okay, gentlemen, I need to attend
everything's
to
good.
my
Good.
lady. Everything is good. We'll continue with we keep the lines of communication open. If any questions, I'll fire some questions at you guys.
Yeah.
And if anything, we just keep the lines of communications open.
Yeah.
Okay.
Yeah.
That's good. Yeah. Thank you.
Thank you so much for your time, guys.
Oh,
Thank you.
thank
Thank
you.
you, Ray. Thank you,
And
Tang. Thank you,
thanks
Wong.
to Ray. Yeah.
Okay. Bye-bye, guys.
Bye now.
Bye bye. Yeah. God bless you.